we need to talk about Tesla's earnings, right? This was one of the strangest ones yet. We did a huge live stream yesterday, so in this video, I'll just recap everything that was said. Now, the quarter itself, if we're being very honest here, was not per se a pretty good quarter, right? And yet, the stock is up at the time of making this video, 4.46%. Now remember, Tesla is my number one position in my portfolio, and I can still say that this was not the best quarter, and I can still say that this reaction here doesn't really make that much sense. This is also happening after the stock being up 77% in the last 6 months. Now, why am I saying that this doesn't make sense? Because if you listen to the earnings call, it seems like suddenly the analysts don't care anymore about the car business, but all they care about is robotics, AI, and energy, which of course is great because now they're focusing on the big picture. But for once, when I wanted them to ask about the new and more affordable models, because we basically got virtually no answer about that, it's still reiterated in the shareholder deck. But there's no real timeline or extra explanation that was, well, mentioned or said during the earnings call, which was quite strange. So on one side, as a shareholder, I'm quite happy because now, well, a lot of these analysts are asking the correct question, the questions about Tesla 5, 10, 15 years from now. But on the other side, we're also talking about Tesla 5, 10, 15 years from now and not Tesla for 2025 because, yes, I would still like to see an affordable model being launched. So quite strange. And I'll show you the good and the bad from the quarter. I also have one very big question that, I don't know, a lot of people did skip, I guess, and that's with regards to apparently a third Megapack factory. When was this announced? Nobody cares. Okay, let's discuss all of that in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. Earnings season on here is going to be incredible. So subscribe, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So all in all, this was the major overview. Revenue missed by 6.3%, automotive missed by 9.1%. Then we've got beats for energy, service, and regulatory credits. No surprises there. More misses here, gross profit, gross margin, auto gross margin excluding regulatory credits, all misses. Adjusted EBITDA and adjusted EBITDA margin did beat, and I'll talk about that in a second. Adjusted EPS missed by 2.7%, and then free cash flow and operating cash flow all beat across the board. And so looking at the whole thing here, right, you can see quarter over quarter, year over year. If we look at total GAAP gross margin, down quarter over quarter, year over year to 16.3%. Operating margin, same thing, extremely low right now, right, 6.2%. We were lower here in Q1 2024. But then adjusted EBITDA margin, that's fine. Net income, that's fine. I mean, we've seen also CapEx increase 21% year over year, down quarter over quarter. So, okay, free cash flow down 2% year over year, and quarter over quarter, well, down $700 million. But the interesting part is, of course, the fact that gross profit, right? Gross profit, as you can see, down quarter over quarter. Net income from operations down quarter over quarter. And then if you look at net income attributable to common stockholders, that's up quarter over quarter. Why is that? Well, if we look at this thing right here, other income, that's up $837 million. And so if you go back to the shareholder deck and you look at basically the second thing that they tell us here with regards to profitability, $7.1 billion GAAP net income in 2024, $2.3 billion in Q4, but that includes approximately $600 million mark-to-market gain on digital assets, which basically is their Bitcoin holdings. So they changed the accounting way for that. So now that's a gain, a close to $600 million gain, which of course definitely helps pump up the numbers. Of course, you can say, look, that's like any other investment, right? Now you're gaining from it. Previously, they were actually losing from it. So, okay, this is the result. Yes, it's true. But if you really look at the core business, well, it did add quite a significant amount. Now, with regards to total automotive revenue being down a little bit, they basically explain everything right here. So the positive impacts were growth in energy generation, that's for total revenue, growth in vehicle deliveries, higher regulatory credit revenue. So that was a positive impact. The negative impact is the reduced vehicle average selling price, or ASP, excluding FX impact due to pricing, attractive financing options, and mix, basically them clearing out inventory in order to launch with the refresh Model Y and the next generation models as well. So that's why we're seeing that take a hit. With regards to profitability, again, reduced S3 XY vehicle ASP, an increase in operating expenses driven by AI and other R&D projects. And then on the tailwheel side, you've got growth in energy generation, storage and services and all of that, lower cost per vehicle, which we can see right here. Average COGS per vehicle continues to go down. This is actually mind-blowing. And then, of course, higher regulatory credits. Now, if we look at the margins, automotive margins 16.6%, as we've seen. Excluding credits, we're now at 13.6%. So yeah, okay, it's true. Again, you have to take that into consideration. The regulatory credits are a thing until they're not anymore. But if you exclude that, the number is really not that pretty. 13.6%. Energy gross margin 25.2%, which is down from the around 30% last quarter, and then services and others 4.2%. Now, a couple of extra things that they mentioned here. One, preparation is underway for Cybercab lines at Gigafactory Texas with production planned for 2026. Then with regards to the Cybertruck, they say it will be eligible for the IRA consumer tax credit, helping to improve affordability and access for even more customers. Now, we've been talking about, the IRA tax credit being removed, so I'm quite surprised that they actually tell us this in the shareholder deck with all the anticipation that, that might disappear. So that's quite interesting. Then in Q4, they achieved record deliveries in China as Model Y became the best-selling vehicle for the full year. So to everyone saying, oh, China is destroying, no, Model Y, being a way more expensive car than a lot of Chinese models, was the best-selling vehicle for the full year. Then, with regards to Optimus, progress on Optimus hardware and software continued in Q4, including the latest generation hand, robust locomotion, and training on additional tasks ahead of planned pilot production in 2025. Initially, the goal there was around 10,000 that they're going to produce, but they'll be happy with several thousands. With regards to the 4680, they said our in-house 4680 cell hit a production rate exceeding 2,500 Cybertrucks per week. As for the outlook, they expect energy storage deployment to grow at least 50% year on year in 2025. They still say that plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. No extra information whatsoever. So, okay, this should help them fully utilize their current expected maximum capacity of close to 3 million vehicles, enabling more than 60% growth over 2024 production before investing in new manufacturing lines. Now, with regards to volume growth, Elon did not reiterate the 20 to 30% volume growth for the year. He actually said that they are battery constrained for the year, which will, hurt them when it comes to volume production. So yeah, I guess that comment from last quarter was not needed. He also said that the training compute for Optimus is 10x that of the car. He did talk a lot about Optimus, how that could be $10 trillion in revenue in the future, etc., etc. Again, those are big goals, big assumptions, big bets, and all of that. Whether you believe him or not is up to you. I take everything with a grain of salt, even as a shareholder of the company. If he says that things will be ready in 6 months, I put it at 12 months. He said that unsupervised FSD will launch with a small Tesla fleet that is in Austin, I believe, in June, which of course led to Uber and Lyft being down after hours. Again, I'll take all of that with a grain of salt. And even with those small launches, I still do not think that it will hurt Uber that much, especially not in the short term. He touched a little bit about launching in Europe and China and the difficulties of launching there because of regulatory issues, political issues, training AI data in China or in the United States and then sending it to China. Lots of issues there, which again is why I think it's going to take quite a while until unsupervised FSD and robotaxis reach the global stage. He also said that they plan on releasing unsupervised FSD in multiple cities in the United States this year. When talking about licensing FSDs to other companies, he said again, talks are ongoing, but they will only do it with high volume customers. With regards to production costs for Optimus, that could reach less than $20,000 if they start producing 1 million of those a year. Talking about the Tesla Semi, as I expected, they said it's a no-brainer, especially when we talk about FSD trucks. I mean, they need way more truck drivers, so if the truck can drive itself, that would be extremely helpful for economies. And then something with regards to hardware 3. So I think this is a big positive for all of those Tesla owners. They finally admitted that they will have to upgrade hardware 3 to hardware 4, and it will cost Tesla, it won't cost the user. Now, after that, he said something quite interesting. He said, now I'm quite happy that not many people bought the FSD package, which is funny because we also asked about more data with regards to FSD, right? The take rate and all of that. So is this the comment that basically proves that maybe FSD take rate is not that high? Because if it was much higher, it would have probably cost Tesla quite a lot of money to upgrade all of those hardware 3s to hardware 4. I still think they have to allow hardware 3 owners to upgrade to a new Tesla and take that license with them, that FSD that they've been paying for God knows how long, take that for free. I know they've been doing that a couple of times, but it would make sense also from a business perspective, because then, the guy just basically buys a new car, takes the FSD with them. So it makes sense. To end, we have a couple of price target changes. So one from Truist Securities, they have raised their Tesla price target to $373 from $351. A Bird Analyst lowered the price target on Tesla to $440 from $480, while maintaining an outperform rating. Piper Sandler, Alexander Potter, reiterated his $500 price target. He said, "It appears Tesla spent heavily on clearing outdated Model Y units from inventory, which negatively impacted pricing. But arguably none of this matters for the thesis. Perhaps somewhat surprisingly, Tesla isn't backing down from a commitment to launch new products, plural, across multiple factories in the first half of 2025, and management still expects delivery growth in 2025. We don't know how much. Plus, commentary with regards to full self-driving software has never been so unabashedly bullish. Autonomy is upon us. Given all this, we're not surprised the stock is trading up 4% after hours." Well, he's not surprised, I am surprised. Because every single time we've had these types of earnings reports and earnings calls, the stock reacted negatively because, nobody believed it. Nobody believed it. So is this the quarter? Is this the quarter where suddenly Wall Street flipped the switch and they are quite comfortable giving Tesla such a high premium because of all of the future potential? Probably. It's also quite nice that this happens at the start of a new year and not in the middle or something like that. But yeah, like I said, at the end of 2024, 2025 is going to be a very, very interesting year. Very interesting and exciting as well. So overall, that's about it. I'm very surprised the stock is up 4%. But then again, I'm quite happy that finally maybe the focus did switch a little bit. I'm still a bit sad not to hear more about the more affordable models, but okay, I guess you cannot get everything every single time. So all in all, that's about it. Leave your thoughts and comments down in the comment section below, like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.